So what we're going to plan to go through today is exactly that, where we stand, how we feel as though we are now going into 2022 as the growth year, and what we did in 2021 to enable us to get to this position. So I'll just skip a few slides here because we've just gone through those. So reiterating that, the snapshot of Scotgold currently is we are developing the CONONISH mine to ultimately get to the phase 2 or the 23,500 ounce gold per annum run rate production by Q1 of 2023. We are planning to do that through a phased optimizational approach, which we'll go through bit by bit through this presentation, rather than just stick with phase 1 and then jump to phase 2. The CONONISH mine itself is a high-grade, high-margin underground mining operation with a centralized processing plant facility. It has compelling economics with a forecast AISC of 544 pounds per ounce, which is in the bottom quartile for international producers. It is a cash-generating asset which gets its cash from concentrate and from gold doré. So it actually produces 2 products for revenue. Once we get to phase 2, obviously we're not stopping there. We then aim to expand a resource and a reserve through increases in the CONONISH mine itself. And we will also move to building a multi-asset gold production through Scotland through the exploration of our regional 2,900 square kilometre licence areas in Scotland. And all of this obviously is supported by having an experienced board and a leadership team with a proven track record of generating value for shareholders. Right, moving along, the strategy or the underlying strategy for creating enduring value is to deliver long-term sustainable growth and returns for all stakeholders. I'm going to repeat that again. It is long-term sustainable growth. Mining is such that it does take time. I understand that that can be very frustrating for some people, but it does take time in order for you to be able to get to a position that it starts to produce good growth and good returns. But our belief is that we're just going to work towards making sure that we get past this very difficult phase, as has happened in 2021, and move to nice and sustainable continuing growth and therefore have good returns for all stakeholders. And the way we do that is we ramp up and optimize value at CONONISH, which we believe we've done very well in 2021. We're now going into the growth phase of CONONISH. So therefore that blends into the growth and extending our resource and our regional exploration. And this is all underpinned by having the people that we require and investment commitment and sustainability. Sustainability in mining is absolutely critical, and we'll go through a bit as to what we are playing our part in that. So sustainability, we are acutely aware that we are mining in the national parks in Scotland. We take this extremely seriously because of the luck that we have given to us through the national park and the trust that we operate sustainably within that area. We embrace the principles of sustainability in all the aspects of our business. And obviously we've done ESIAs and decommissioning restoration plans. Numerous initiatives are in place to support the sustainability. So it's been asked quite a few times, so I thought I'd talk about it. We, in our processing plant facility, actually dry all of our tailings, which is becoming quite normal within the mining industry, but is not the norm in the history of mining, whereby some older facilities, and even some new to these days, they stack all of their tailings in a big impoundment and have therefore the risks of dam bursting, walls collapsing, and also have potential of multiple chemicals and the like within those dams fluidized in water. We do not have that. We have a dry stack tailings. We do not use cyanide. And so therefore we put our tailings, which is effectively like a sand product, within the divots of the landscape, so that again, it is not an eyesore for people when they're walking around and looking from afar. We also have a commitment to reduce our CO2 emissions by connecting up to hydropower. We have not done that as yet, but that is on our plan. And hopefully once we get to that, we'll have a good CO2 emission delivery. So the foundations of sustainable responsible mining are within these values, obviously environmental management, leadership, culture, and zero harm. And these all underpin, oh, sorry, I just lost the slides. There you go. Underpin the way we do business. So our people, without having people that are experienced, knowledgeable, trained and competent in mining, it just effectively does not work. So in 2021, we had to go for quite an extensive campaign on recruitment, where we've increased our people by 92%. We now have 73 employees. We still do have some contractors, specialized contractors that we need in order to be able to train and help our people. So that probably takes us up to close to 80, but we have a commitment to take that down and recruit all of our people as much as possible. We will be growing our team further in 2022 as well. Again, underlying this, we started very hard from the beginning or quarter 2, quarter 3 of this year to make sure that we effectively just do not hurt our people. So the zero harm title, the zero harm value, is very important to us. So we make sure that we're dedicated to the safety of our people, communities, and environment. Our results are that we've had 118 days of LTI free, 289 days of zero reportable incidents under the mines regulations. We do this through just rigorous H&S training programs and enforcing and making sure that people go home in the same position that they went to work or better. It's incredibly important in the mining industry. Right, 2021, let me talk about 2021. It's a transformational year. In Q2 of 2021, Scotgold commenced with a new leadership team, obviously with a new CEO. We, as you may have noticed, had a look at the mine plan, had a look at what was there in front of us, and decided that we had to redesign the mine schedule and design itself through 2021. So rather than just having development tunnels, which would give us all sorts of variability in gold grade throughout the year, that means we could have got whatever number they would have been, but it just would not have been consistent. I wouldn't have been able to have consistent revenue. It would have been very, very difficult to be able to operate under that regime. So we pulled together some cut and fill stopes that enabled us to continue on in our development on the tunnels, but at the same time, somewhat better control our grade to the process plant, which enabled us to then operate and ramp up the process plant at the same time. In Q3, when we went through that, we're at the same time in the process plant ramping up. We had a myriad of normal, typical ramp-up issues that are underlined by effectively like anyone would have if they were operating a car or a house, not having enough critical spares or the right type of spares or the availability of spares. So we had to implement a procurement system with people chasing all sorts of bits and pieces around the world, daily meetings, which then went to 2 times a week. And still for us is a very, very intense focus to make sure that we always have critical and the required spares as needed. We also went through and implemented maintenance and maintenance planning practices to optimize all the efficiencies to move away from a breakdown scenario into a more planned scenario, which again is much more effective. And as a result of that, we got to production revenues that exceeded operational costs. By the time we then got into Q4 of 2021, we completed the modifications to these systems. We put in as many critical spares required. We did quite a few other little modifications that were needed, and including doing some fairly large tasks like the relining of a ball mill, which is no mean feat. again, I'll talk about that for a little bit. We have people that have never really done that exercise before in their life, and we're able to get away and do that without any safety incidents, and we did it in record amount of time for us. And obviously the next and second or third time, we'll probably get that down into the same sort of times that other people do it around the world. But that was a huge step forward for us. With record gold concentrate production in December 2021 was achieved, and our concentrate sales was above 2.6 million pounds for the quarter. So where we are today is during December. Obviously, it shouldn't be a real shock, but we had to shut down for all sorts of reasons, like Christmas Day and Boxing Day and public holidays left, right, and centre, and New Year's or the day before that. So that meant that we weren't able to achieve exactly our 3,000, but we were within 5 days of achieving our phase 1 run rate of 3,000 tonnes per year. So that meant we finished 2021 and went straight into making sure that we keep our foot to the floor and go straight into an optimization ramp up for 2022, rather than just sit at this phase 1 throughput. Again, this slide just goes through a little bit more of the highlights. That were just probably repeating myself with the record December production, Q4 2021 production of 1,500 ounces, silver of 7,200 and 6,168, and the sales there, which enabled us to get 2.6 million pounds into the bank, into our account, sorry. And like I said, I feel like we've got very, very close to our 3,000 phase 1 target rate. Right, so what does that mean? So we get straight into 2022, into Q1. The mine was predictably, as we went from our first cut and fill stope and we continued on developing our tunnels, we know that means that we're going into a potentially more variable time. And as a result of that, as we put out in our last press release, we wanted to position the company to be able to weather this. And we're just continuing on with the process plant ramp up and continuing on with the development to access stope number 2. So by the time we get to the end of Q1 of 2022, we believe we'll be at an annual run rate of 36,000 tonnes, which is the 3,600 tonnes per year, and with a target average gold production of 9,900. Then it becomes really exciting for us. So once we get to Q2 is when we start to open up a lot more of the potential of CONONISH. What that means is by running the process plant for the time that we have, we know our bottlenecks, we know where our pinch points are. And so we've gone off and ordered a thickener, which we feel is the biggest bugbear of our process plant currently. It restricts our throughput into the tails filter. And as a result of that, that is what's limiting us from going from 3 to 4 to 4,500. So we've ordered that. We plan on that arriving in Q2. We will then install it. And as soon as we do that, then we'll have a unrestricted process plant up to 4 to 4,500 tonnes, which is the annual run rate of 51,000. And then with a target average rate of gold production of 6.5 to 7.5 based on where we have developed into the mine at that phase. Right. But then when we go through 2022, past Q2 and into Q3, again, I'll go through this a little bit more detail, but then we actually get to the point in the mine where we actually start to do the retreat long hole stoping. Now that part is when it becomes extremely exciting. That's when a mine actually starts to really deliver, because once you start to have stopes, you can then get much better control. Doesn't mean you will always have, but it gives you much better control because you have multiple faces and multiple areas that you can take ore from, and then maximize the potential to enable you to have reserve grade gold at your process plant at all times, rather than having these big variabilities. So what does that look like graphically? So graphically, Q1, as I talked about, is our develop, get to cut and fill stope as quick as we possibly can into Q2. We'll hit that by the end of March, but we'll probably get the most of it come April. That's why you get that big kick in gold revenue come around about April to May. But at the same time, we'll install our thickener. So we'll have an increase in capacity in the process plant, which will then take us into Q3. We will then run out of that cut and fill stope, sorry for my voice, and then we start to hit those stopes. Once we hit those stopes, even though the process plant is sitting at the 4,000, 4,500 tons per month, the gold revenue starts to increase because that's when we start to hit our stopes. I can't talk about stoping enough. Stoping is the benchmark, or it's the godsend of any underground mine. Once you can start stoping is when you can really start to pick and choose and get much better gold grade delivery to the process plant. And that's what creates your revenue, combination of throughput plus gold grade. Right, so again, talk about this in more specific terms. Throughout the first part, these are the runtime improvements, which gives us an extra about 500 tons per month, which is to implement our ERP system, which we're working tirelessly at to get that ready to go this quarter. Still the same work on the process plant to get more and more consumables and to mitigate any downtime as possible, and to obviously just get better and better at our maintenance practices. And the same thing applies to mobile mining equipment in the underground. Same. We just got to get as best as you possibly can to have more planned maintenance, or as close to 100% planned maintenance and zero breakdown as possible. At the same time, installing the tails thickener, which gives us that increase in throughput. And down the very bottom, these are our predicted quarter by quarter run rates through these initiatives. Right, mine plan. So this is what mining 101. This is mining 101. This is where we are at. We started at a porthole on the right-hand side, and we're working to the very left. As you can see, we've been developing as much as we can, but we've still got a long way to go. All those colored codes gives you indications of what we've done versus what we plan to do. We still have a lot of development to go onto the left to keep going to where we get access to our stopes. And we're in the middle there, you can see we've still got more development to get the waste drives up so we can access other levels as well. Now that's a plan view. Plan views are not terribly wonderful to look at or easy to identify, so put it on a rotated view to hopefully make it a bit more sense. It's the same thing, but just rotated. Starting on the portal, working to the left, and in the middle having the ramps. So you may hear me from time to time talk about levels of 400, 415, 430, 445. These are just all the development tunnels that we have in our mine. But at the 400 and 415 is what we are achieving right now. That means we've got two faces rather than having the one face that we had traditionally. That in the middle here, you may see that we had a cut and fill stope that has now finished, but that's the one that enabled us to get the good grades throughout 2021, as we've talked about. And this is the distance that it takes to get across to the second cut and fill. So these things, like I said before multiple times, is what enables us to get much better gold grades through the mine whilst we're still developing these tunnels. But as you can see, the next bit over here, the stoping, that's where, like I said, is where it gets nice and exciting, because we get, for every blast, we get a lot more tons. Our cost of mining reduces, and we start getting a lot more tons of material, plus better access to grade, or better control of your grade, so to speak, rather than just be at the mercy of the grade that you hit as you're developing into tunnels. It's a very, very important point. Right, so that takes us to Q3 of 2021. In parallel, to get us ready for 2023, we're doing work on installing an ore sorter. An ore sorter would go in our process plant between the crusher and mill. What that would do is enable us to sort the material that is gold bearing from the material that is not. We believe that there's good indications, and obviously still doing a lot more due diligence and test work on this, that material is quite identifiable between when it actually has gold in it versus when it does not have in it. If we're able to get this installed, which we plan will, then this will revolutionize our mine and our processing plant, because it will help in so many different ways. But I'll leave that to another time to talk about the specifics, because that's probably about an hour's discussion just in itself. Right, and again, even though we will then aim to get to Phase 2 by Q1 of 2023. Again, we're not just stopping there. We will then access, or we might actually do it prior, but our plans are to grow through exploration. That being the case, James McDonald, our VP of Technical Services, here to help me along. He's a geologist by nature, so he's going to take us through the exploration parts and details. So hand it over to you, James.
Thanks, Phil. So I'll start off with Scotgold's kind of core asset, which is the CONONISH vein. In the image you can see in front of you, we have a long section of the deposit. On the right hand side is the portal and where the mill area is, and you can see the lateral development for the life of mine plan, and also the blocks within the JORC resource model. And overlaying on this is the drilling traces from all of the previous exploration that has defined the mineral resource. What is quite clear is that the majority of the drilling is clustered around the mineral resource and very little drilling outside of that. The other thing to take away from this image is that the majority of drilling is blue, which basically represents work done historically, i.e. pre-Scotgold, largely by a company called NX in the 1990s who discovered the deposit. The red drilling done by Scotgold is largely focused within the mineral resource. It's resource definition rather than expansion drilling. And a lot of that drilling now does date back almost a decade. So the takeaway from this is that there has been a lot of gold defined, but very little work done to expand the mineral resource since basically its discovery, with the majority of focus being on the development of the project today. On this slide, we can see the same image with the drilling removed for clarity, and in the upper image, we can see that there are several areas where we have inferred mineral resources. So we've defined the CONONISH vein structure, but there's not enough drilling density to actually bring that material up to an indicated or measured category of mineral resource and therefore convert it to mineral reserve. And as such, this material stays outside of the mine plan. These areas represent a very quick and easy and low risk opportunity to rapidly expand the life of mine. One of the things that has come out of the work done by the geology team on site is the identification that significant areas of gold endowment can be found over relatively short distances. So we could have regions, for example, 40 by 40 meters that can contain reasonable stoping areas, and these need to be therefore drilled at a density of 40 by 40 meters or tighter in order to find them within the main CONONISH structure. And the majority of these areas have not been drilled to that density and therefore present opportunities for additional stoping areas to be discovered. In the bottom image, you can see that there are significant areas either along strike, down dip, or in the hanging wall or footwall that present opportunities simply through lack of drill testing that have yet to be defined. And as Phil's illustrated, now the company is becoming cash generative and looking forward, the opportunity to start building on the kind of cornerstone asset that we have to expand the mineral resources becomes very real and very tangible. Stepping out now to the regional exploration. On the left-hand image, you can see Scotgold leaseholding. It's a fairly significant leaseholding over a very prospective block of rocks, the Dalradian Belt, which starts in North America, moves through the Republic and Northern Ireland, where it hosts the Cavernacour and Coronialt deposits, through Scotland and into Scandinavia. A lot of gold has been found in this block of rocks, and including in this leaseholding, as the table on the right illustrates, there's been significant early stage exploration undertaken by Scotgold and their predecessors in defining a lot of anomalies in this area. Unfortunately, however, these have remained as anomalies, and although they've been confirmed with various different methodologies, particularly Scotgold has pioneered the use of the ionic leach sampling in the region, they have remained as anomalies and haven't been developed through a lack of funds to undertake exploration drilling. And this, I think, is therefore where there presents quite an exciting opportunity for the company. Particularly, say, coming back to the immediate footprint around CONONISH. On the left-hand image, you can see gold in streams, and on the right-hand image, gold in soils. You can see the scale of the CONONISH deposit compared to the anomalism immediately around it. And it's quite exciting for potential extensions to the main system, or to find parallel structures as potentially indicated in the soil sampling. And also the Bernoulli anomaly to the immediate north is of a significant scale and has had some minimal drill testing undertaken on it, with gold in bedrock discovered. These represent some quite exciting opportunities to expand, and there are 3 or 4 other perhaps drill ready or close to being drill ready targets within the immediate region as well, that potentially haven't been tested to date because of the early stage nature of the exploration undertaken. So what we have is a lot of information that allows us to rank and define the areas that have the highest chance of success. There's 30 years of work undertaken in the immediate area and throughout the leaseholding. And now, as Phil's illustrated, the company is starting to become cash generative. The opportunity to start exploiting that through drill testing and converting anomalies into bedrock occurrences and into mineral resources, and then forward into reserves, becomes much more tangible. And therefore, while there is a hierarchy of priority to these targets, obviously, with ounces found in the immediate vicinity of CONONISH or within the CONONISH structure being the highest priority, there's now opportunity to start building potentially a multi-asset company around the work that's been done to date. I'll pass back over to Phil.
All right. Thank you very much, James. Okay, so last couple of slides is now moving into driving shareholder value. So our growth plans underpins all of this. We start with, as we started at the beginning, to make sure we hit the phase 2 production by Q1 of 2023. By that stage, we have a cash generating forecast to increase through 2022, and finally to achieve circa 21.5 million pounds per annum. We do this through our optimisation and growth. Optimisations we've talked about through the process plant and into the mine, hitting to the stopes, then going into the growth and exploration by, exactly like James has just explained, by hitting the close targets within the CONONISH vein itself, and then to explore into others in and around the mine. As a result, valuation was just released with all of this information, which is a price target of £1.62p, and we're currently trading at 50% discount to this. So that wraps up the presentation. Just in the appendices, I have some reiterating what we have on our website, some slides of the board, some bios, and also to the leadership team. Unfortunately, we just can't put everyone on this leadership team. It would be wonderful if we could do everyone on site, because every single person obviously contributes to the success of Scotgold. But this is just a snapshot of the people that we have. Okay, that takes us to the end of the presentation, and now I turn it up to Q&A.
That's great, Phil. Thank you very much to yourself and the board, and to James for updating investors and attendees this morning. Please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the company take a few moments to review any questions submitted today, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, will be available via your Investor Meet company dashboard. I might just bring up the cameras now, if I may, and obviously you've received a couple of questions, and perhaps if I hand over to Sean, if you would be so kind as just to chair the Q&A and pose those questions as appropriate, and then I'll pick up from you at the end before redirecting investors to give you their thoughts and expectations via some feedback.
Yes, sure. So question I have is, early on you were very cautious, Phil. The focus was on safety and seemed like the focus on basic tasks. By the end of the year, you've become a lot more optimistic and even forward-looking, which is good. But could I ask what's changed?
Yeah, okay. No, very good question. So it is very normal that when you walk into a mine, depending on where it's at, you do need to get on top of your risks. And I found that for several months, all I had to do was just understand exactly what all the risks were, no matter how ugly, no matter how bad, and then just work really tirelessly about mitigating those risks. And once we got to a point where we could mitigate them, well, the results obviously started to come through. We started to get sort of far more consistency, far more reliability. And as reliability works in your favor and consistency works in your favor, and you are managing your business with managing of risks, well, then you can actually understand you've got a nice solid base to pounce off and go forward. So it's really quite simple stuff.
Okay, so second question I have on here is, what do you think your biggest challenge or challenges will be during 2022 to achieve your production targets?
All right, so that's an easy one, exactly as I just talked about in the mining, accessing of stopes. So mining, underground mining particularly, is all about accessing of stopes. We have to develop, and we have to develop our tunnels to be able to give us the best flexibility. Once we get, if you remember on the graph, we actually start getting rid of this variability. We start to get a nice growth line. Once you get to those stopes, and only once you get to those stopes can you then start to somewhat control your grade. The more access to higher amounts of faces and stopes will enable that. So that is our number one risk, and it is our number one impediment to achieving our production targets this year.
That's great, Sean. I think that's the couple of questions that we've had come in throughout the annual general meeting. Of course, if any further questions do make themselves available, obviously we'll make those available to the company post today's meeting. I know attendee feedback and shareholder feedback is particularly important to the company, and I'll shortly redirect all the attendees on the call to give you with their thoughts and expectations. In fact, John M has just submitted a question there as well, Phil. But perhaps I could ask you to maybe take John's question, and then if I could ask you for a few closing comments to wrap up with, and then, as I say, I'll redirect attendees to give you their thoughts and expectations.
Yeah, no problems. I mean, James, you can take this one if you want, but my understanding is absolutely not. The question is here, as the mine ramps up to production, do you believe that you need to debottleneck the access drives to enable better ore transport?
Yeah, I think it just fills into your previous comment, Phil, that access to multiple headings and multiple stopes is the key one. As far as transport, we've ramped up the fleet. We've brought in an extra ore haulage truck, for example, during the year. And certainly at the minute, there aren't any impediments to haulage, so to speak, or hoisting ore from the mine. The key thing is access to multiple ore faces.
Couldn't say better myself. Yep. Okay. I don't see any further questions.
No, absolutely. You've taken them all, so thank you very much indeed. So if I could just perhaps ask you, Phil, just for a few closing comments to wrap up with, and I say I'll then redirect in attendees to give you their feedback. Okay,
no problems at all. All right, so as we've just gone through today, we presented what happened in 2021. It is titled a transformational year. We believe strongly that it was a transformational year. Our safety results, our production results, I believe should be quite encouraging for investors. But now we are straight into 2022, and 2022 for us is our growth year, pushing into 2023. There's lots of initiatives through the thickener, through accessing of stopes, and then putting an ore sorter in, and then to do exploration. It is extremely exciting if we get through 2022 with our plans and into 2023. 2021 was by far the most difficult year, and hopefully our investors will give us some encouragement by the fact that we've been able to achieve that, and we will just keep releasing information through 2022 based on the success on our growth as exactly as we had planned to do through 2021. So it should be hopefully a replica of 21. As we have success and as we grow, we will release that and make sure everyone understands. But this is our plan, and hopefully we have the full support of everyone.
That's great, Phil, and to the rest of the board of Scotgold Resources, thank you very much indeed for updating attendees today. Can I please ask attendees not to close this session, as we'll now automatically redirect you in order that you can provide feedback so the board can really better understand your thoughts and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the board of Scotgold Resources Limited, I'd like to thank you for attending today's annual general meeting, and good morning to you all.